The Fed allows the party to go on, but as metals and oils make giant gains, it begs the question as to whether or not we are on the brink of a giant bubble. I'm Monica Gibson. Casper, the current gains in base metals were largely due to the weaker dollar. Therefore, the rallies are likely to be limited. Is that right?
Well, lately base metal prices have increasingly been driven by fundamental developments, and therefore I don't think that a giant bubble will be created. We have seen so far this year that the LME stocks have been increasing steadily, while at the same time the weighted base metal price has been declining. And since the peak of 16th July this year, total stocks volumes have decreased by 3%, and the weighted base metal price increased accordingly by 3%. And of course, it must be said that rising metal commodity prices are welcomed by high-cost producers, and metal markets with a relative high-cost base welcome these higher prices. And we foresee some price increases for the next 3 months, but it must be stated that the overhang of stocks currently in some metal markets and the excess production in some metal markets is very worrisome.
According to some analysts looking forward, base metals carry a mixed bag of possibilities. Copper, lead and zinc are looking very good, but nickel is not so strong at this point, which has a lot to do with where the demand lies in Asia, specifically in China. But what is your take on these sectors at present?
Okay, yeah, well, so far this year, the developments in nickel have not been very rosy indeed. Since the start of 2013, prices have been decreasing by 16%, and stocks at the LME warehouses have steadily been increasing by a rise of almost 48%, and that's quite significant. In addition, both industrial output of nickel products and nickel pig iron production in China was increasing strongly in the first half of 2013, and as a result, the market continued to be oversupplied. But we expect that demand for nickel will be slow, mainly due to relative slow demand from the stainless steel sector, which accounts for approximately 65% of total nickel demand. In the first half of 2013, stainless steel demand deteriorated in Europe and Asia, while stainless demand in the US and China increased somewhat. But nevertheless, our long-term outlook remains positive, as nickel is increasingly used by sectors such as aerospace, oil and gas, and the medical sector. And we foresee price for the coming 3 months increase from current levels of 5% for nickel.
Some analysts are positive on zinc, particularly for 2014-2015, due to projected supply constraints. Is this in line with your estimations, and is there opportunity to be had with zinc?
Yeah, well, zinc has been drifting around $2,000 per ton for almost 2 years now, and one of the main reasons is why zinc prices have gained in strength somewhat is the improving economic data in especially China, which is a big consumer and producer of zinc, of course. And according to the data from the ILZSG, the International Lead and Zinc Study Group, apparent global refined zinc demand increased by 5.8% year-on-year in the first half of 2013, and the main driver was, of course, China, which increased its demand by 8.9% in the same period, while conditions in Europe and the US was somewhat slower. And we foresee for zinc that fundamentally it's a very sound market, and we foresee for the coming 3 months an increase of approximately 7% from current levels.
Casper, thank you so much for your time and perspective today. Well, viewers, that's all for this week's Commodities Corners. The next one will be on Tuesday of next week, but don't forget tomorrow we have PR, Targets and Focus, and the wrap-up, including very much more. So please do keep clicking back to Dukascopy TV.